All right. Welcome in, everybody. We are just getting started here with today's Avalanche Spaces. Got a really special edition to talk to some of our awesome partners and investors in the ecosystem to just kind of talk about the road ahead for Avalanche and what we're looking at for 2025. So excited to get this started. We just got the room open, so we'll give it a few minutes for people to kind of join and trickle in and get our speakers up here, and then we're going to get our conversation started. So let me grab Ben up here, and then I think we already have John and Asib. All right, cool. Looks like we got them all up here. Let's test out some audio real quick, and then we're going to get things started. So Asib, welcome in. Wanted to just see how your audio sounds.
Yeah, thanks for having me. Sound
All right.
okay?
Yeah, sounds great. GM, man. Thanks for coming.
Perfect.
All right. And Ben, are you on the ParaFi account?
I am. Yeah, great to be here. Can everyone hear me?
Yeah, sounds great. Thanks for joining us and for taking the time today. And then John, how you doing today?
Good morning, everyone. Hear me okay?
Yeah, sounds great. Well, I know we want to keep things moving along and obviously honor the time of our guests here. So let's kick things off, and then we know people will be coming through as the conversation gets going. But welcome everybody in again. This is a new edition of Avalanche Spaces where we're going to talk about investor outlook and some insights from key investors on the future of Avalanche going into 2025. We're going to talk a little bit about what came from the Avalanche 9000 upgrade back in December, and dive into the locked token sale that we announced back in December as well, the $250 million sale in support of the Avalanche 9000 upgrade. So we got lots of fun things to talk about, and we're going to dive in, and then at the end we'll potentially be able to take some questions depending on the time. So if you do have questions, we'll call you up and let you know at the end here, but hang tight in the meantime. We also want to make sure that we caveat here that nothing that's discussed here on the conversation can be taken as investment advice or legal advice. Obviously, these are the perspectives from our special guests, and so nothing here is legal advice, of course, on any of our spaces. So from then, let's kick things off. Let's do a quick intros for those of you who may not know our guests here. So let's see, why don't we kick it over to you and just say hello and give a quick intro on yourself.
Yeah, happy to do that. So I'm Hasib. I'm a managing partner here at Dragonfly. We're one of the big crypto funds that you've probably heard of up and around the space. We've been very early supporters of Avalanche from actually the way early days. We were investors in the seed round, and we've continued investing over the many years into Avalanche. So we do both liquid and venture, and I come from a software engineering background, so I have a particular love in my heart for all the stuff you guys are doing on the tech side in particular, as well as the real world adoption and tokenization side. So that's me. I'll hand it off to Ben.
Yeah, great to be here. My name's Ben Forman. I'm the founder and managing partner at ParaFi. We are an investment firm that's focused on the blockchain and digital asset ecosystem. We have venture, quant, and token-related strategies. We have been investors in Avalanche for a very long time. We were thrilled to double down in this recent round. Avalanche, in fact, is now one of the largest investments we've made in the firm's history. And a big part of that was not only the technical architecture, which I think we'll get into, but also really the focus around real world assets and financial institutions coming on chain, and Avalanche really providing kind of the right set of infrastructure for them to do that. So thrilled to be here and chat more about this.
Awesome. Yeah, great to have you both here. And I'll let John kind of introduce himself, and then we'll jump into the conversation.
Thanks, Kyle. Good morning, everyone. Hasib, Ben, thanks for joining us today. It's really a pleasure to be with both of you on the spaces. For everybody, I'm John Nahas, Chief Business Officer at Avalabs. Been at Avalabs for a little over 4 years, since pre-mainnet launch of Avalanche. Been overseeing the business development team and the ecosystem growth team across all the different verticals that we cover in industries as well as the international team. So great to be here. Worked with these guys for a long time and with everybody else in the ecosystem. So thanks for having me.
Yeah, we got a great group here, and there's a lot of good things to talk about. But one of the things I wanted to start off with is to just start with the point back in December where we announced this the recent block token sale, and wanted to kind of just hear from Hasib and Ben just kind of the genesis of this and why you decided to you both kind of doubled or tripled down on your support here. What about this roadmap? What about the future of Avalanche? Stands apart as an ecosystem, and why did you kind of both from your perspectives come in to double down on your support? Let's see. We'll start off with you.
Yeah. So I mentioned we've been investors in Avalanche for a really long time, and we've seen Avalanche really evolve alongside the crypto industry. Like I first met Goon in 2017. Remember we sat down at a coffee shop and he gave me the very first pitch for Avalanche. I don't know, it was literally the very first, but one of the very first pitches. And the vision was very different than what it is today because crypto has changed so much since 2017 to today. But the one through line I think that Avalanche has always seen is, well, the two things. One is that you realize the importance of team and the importance of just having really, really high quality people pushing for adoption. One thing that we realized over time is that crypto and L1s in particular are not just about technology and innovation. That's very important, but it's also about just rolling up your sleeves and doing the legwork to actually get people on chain in a way that they can understand and easily approach. The second thing was this idea that I think Goon articulated even at the time is that it's not going to be just one chain. We once upon a time there was a real question about are we going to live in a uni-chain world or a multi-chain world? And now the answer is really obvious. There's so many chains out there, and the vision that everybody's going to be able to live on a single unified set of block space, it's just not feasible. Blockchains just don't work that way. And so in a way, what I see as the Avalanche thesis is this kind of chain maximalism, is that there's going to be arbitrarily many chains. They're going to be spun up incredibly simply. They're going to be able to interconnect to each other. But if you are a business, an institution, you have some kind of reason why you need your own, or a game for that matter, if you need your own segregated block space, the only way that's really going to work is basically to have some land of your own to be able to customize and occupy the way that you see fit. And so in the same way, when you're a big grown-up business, you don't have somebody else's office. You don't have somebody else's servers that you're co-located with. You have your own dedicated space. We think it's really clear that that's going to be a big part of the story of how blockchains scale. And that's the core of Avalanche's story. So that's a big part of the reason why we were excited to triple down here.
Love it. Yeah, Ben, I'd love to hear from you as well.
Yeah, so to dovetail on what Hasib said, I think at its core, Avalanche is a launch pad for L1s. And look, if you kind of follow the through line, we've seen a lot of growth in kind of app chain popularity, DYDX, Hyperliquid, Uniswap, et cetera, all examples of major protocols choosing to develop kind of their own custom blockchain solution. And those are all crypto native apps. But in this next cycle, and I think the defining growth vector for the rest of this decade in the blockchain space is corporates and financial institutions coming on chain. And you're seeing that from Citi to Sony to Robinhood. If you listened to the earnings call yesterday, they want to tokenize every private company. They want to launch a stable coin. They want to tokenize the entire stock market. And as we think about those corporations and institutions kind of coming on chain, we think Avalanche is the most logical place for them to build. And really the reason why we believe that is because it's simply like it's the most utilitarian. So not only is its block space fast and cheap, but because you can spin up your own L1 on Avalanche very easily, you can also customize all the different features of that blockchain. So you have your own execution environment. You can design your own token economics, so your token can be used for gas. You can customize the number of validators and also permission who can be a validator. You have your own sandbox or your own execution environment, so you're not subject to congestion or outages if a meme coin is launching on your blockchain, which is the case with most major L1s today. So if you're, and think about it, if you're a gaming developer or financial institution, the last thing you want is for your users not to be able to execute a transaction because there's congestion on the main chain. You also have things like native interoperability, KYC, AML, which I think is extremely critical for institutions as they come on chain. And then you have things like privacy, et cetera. So I think all these things just make Avalanche a very logical choice for financial institutions and corporates when they move on chain, to a logical place for them to build. And kind of reverse engineering a bit of our thesis at ParaFi, we believe that the most valuable blockchain will be the blockchain that kind of dominates tokenized real world assets and stablecoins. And if you kind of look at the crypto market right now, stablecoins are maybe 7 to 8% of crypto market cap. They're about $200 billion market cap, and crypto is roughly $3 trillion. But stable coins are 70 to 80% of every blockchain transaction involves a stable coin. So if you ask people like what's happening on chain, it's really kind of all comes back to stable coins. So I think winning stable coins, winning tokenized real world assets, these things are just absolutely critical. I think Avalanche is very well positioned for that. And that, that was like one of the things that definitely gave us conviction to triple down in the round in December.
Yeah. Wow. You already hit all the major points already, and there's some really interesting things in there especially within your own thesis at ParaFi that we definitely want to touch on, because I think there's some really interesting elements there of how some of these choices are made and what the kind of the future looks like for this massive tokenization effort. So we're definitely going to dive into a few of those things, but wanted to just go back over to John for a second, kind of going back to the token sale. Tell us a little bit about kind of the reason for the raise and kind of what kind of partners you were looking for and how it all came together.
Yeah, look, I mean, with friends like Hasib and Ben, is just reiterating our vision and our mission. It makes it really evident, right? That we've got fantastic partners, and that was really the impetus for this. Everyone calls it a raise, but that was not the intent. It was not the purpose, and it really wasn't. This was kind of started a little over a year ago with the anticipation of the Avalanche 9000 upgrade, right? The Etna upgrade, whatever you want to call it. We saw kind of where we're going to be going. This is the fulfillment that you would say of kind of the Avalanche vision, right? First was the C chain, then it was Avalanche L1s. We were calling them subnets. I'm happy we rebranded that. But it was, we brought a lot of the private permission stuff and the permission public stuff, but that's the credit of the stuff we did first and foremost on the crypto native side, right? So I'll take you guys back to Avalanche Rush. We went after DeFi first, and we cemented our position there. That innovation, that crypto native innovation that happened then and that's still happening now is really what forces those incumbents and those institutions and those enterprises to really move on chain, right? So to Ben's point, with this coming up now and where we see real world adoption coming on chain, real businesses coming on chain, Avalanche 9000 was the upgrade that kind of was the fulfillment of that vision of an interoperable future of many different chains, right? Like Asib mentioned, Gun's vision from the beginning of many chains having interoperability, acting as one, but really unlocking the ability to have public permissionless innovation alongside permission public if you're a game or you're an enterprise, or private permissioned if you're a government, or if you're an institution that needs that. That's really kind of how it grows, right? We're moving away from this general purpose L1 thesis where everyone launches a chain with a little bit of a tinker, its product is its token, to real world adoption and stuff. And, given everything that's been happening over the course of the last several months, we're seeing this. So when we looked at this landscape a year ago, we said, look, we have all these great things coming for us. This is like almost like a second launch of Avalanche, right? And who do we want to be helping us spread that vision, helping us with that mission? to really grow the adoption and grow. We really wanted to expand to new partners, but also go back to the core partners that have been so helpful to us, and have them be a part of this journey. And really grateful to have, Dragonfly and ParaFi's support here, as two parties that were leading this. So really, it was more of a let's get our friends together, and let's go get some new friends to help push this second big kind of unlock that we had coming.
Yeah, absolutely. I think I want to touch on that a little bit more in terms of, you kind of mentioned that the upgrade brought innovative like technical architecture to both the single chain performance optimizations, as well as the ease of launching these highly customizable L1s that fit all these different use cases. And what's interesting about having both Dragonfly and ParaFi involved is, not only were you both early on in supporting Avalanche's kind of initial launch, but you also have a ton of other portfolio companies. You're talking to applications and founders all the time. I'd love to hear a little bit about kind of what you're hearing in those conversations about this kind of next wave of blockchain adoption, and what they're looking for in terms of customization options, or these innovative things that they can't necessarily do on kind of a general purpose chain, and then how kind of the crypto native applications are starting to look at these bigger architecture decisions. So, and the conversations you're having with founders from across the industry. So I guess, Haseeb, I'll kind of kick it over to you. Like, how do you see Avalanche itself pushing on both kind of the crypto native side, and having chains that are really highly performant, as well as new innovative use cases that people haven't thought of yet or haven't been able to launch yet, and how Avalanche kind of caters to both of those worlds?
Yeah, so Ben spoke very well to the institutional side. I'd say on the crypto native side, most of it is that people increasingly want to control their own fate, right? You see this with the rise of all these app chains, all of these application-specific layer twos. You saw Uniswap just launching Unichain. And so the question is, why are they doing this, right? You can see right now the sentiment among layer twos is kind of hitting rock bottom. People are realizing that the layer two architecture is kind of, it's a little bit fucked. It's not really a pleasant experience to bridge in and out. There's a lot of overhead to running a layer two, and the tokenomics are not really that favorable to the underlying tokens, because generally speaking, you're not using the tokens natively. There's no staking. You're not really accruing any value to the token itself. And so I think that's causing something of a rebound. And you see this with, for example, Hyperliquid. Hyperliquid is not a roll up. It's not a layer two. It's a kind of full on layer one that just bridges into Arbitrum. And I think this rebound that you're seeing in the rise of L1s kind of plays perfectly into where Avalanche is sitting. So both ParaFi and ourselves are talking to a founder right now who's planning to build on an Avalanche L1. And the reason why they're doing that is, first and foremost, they want to control their own fate. They want to control their own tokenomics. They don't want to be subject to the whims of Ethereum, or the Ethereum, kind of vicissitudes at any given time, or Ethereum politics. Second is that, launching, especially after Avalanche 9000, launching an Avalanche L1 is extremely easy. It's just super fast, and the Avalanche team has, pretty much industry leading support in just getting you up and running to get an L1 off the ground. And so I think the ability, if you think about it, before Avalanche 9000, there was a lot of fixed costs to actually launching an L1 on Avalanche, right, at the time called subnets. And I think Avalanche has had a realization, which I think is correct economically, is that what you really want to do is not worry about extracting as much as you can by charging high setup fees to get an L1 off the ground. The real thing you want to do is just get hundreds, thousands of L1s, get everybody to be building in the Avalanche ecosystem. And to me, that's just so obviously the right move. It's what we've learned from blockchains across the board, is that you drive fees down, you make it easy for people to onboard and for people to create applications, and the pie grows because, it's the same thing with cloud computing, right? The prices of cloud computing have been cratering over the last 15, 20 years. And at the same time, the revenues have been increasing proportionally to how much the unit prices have been decreasing. And it's the simple law of economics is that the more the cheaper you create supply, the more and more demand makes up for it by just expanding the set of use cases. And I think that's going to be largely true as well in blockchain land.
Yeah. Yeah. I think the idea of making it super easy to launch and then seeing what amazing ideas can kind of spawn from there is definitely kind of at the root of the vision, as well as I think one of the key elements is the native interoperability with interchain messaging. So the ability to kind of launch something, but have the connection and the pieces to pull from the main C chain. So like, you don't have to build your own Oracle. You can pull the data from Chainlink on the C chain, and all of these native things that are kind of out of the box, I think helps these crypto native firms, but also these institutional or enterprise partners that don't have native Web3 development teams in-house. They don't have these like experts that know how to build out bridge connections and all these different things. So that built right in, I think, is another big area of exploration. And Ben, I was going to go back over to you a little bit just to kind of put a bow on the institutional and RWA growth and see if there's any other insights from partners you've been talking to about how these big, traditional financial players or large consumer facing businesses are approaching tokenization, and what are the needs that they have that Avalanche could specifically service?
Yeah, absolutely. I mean, it's actually a very, very personal question in the sense that at ParaFi, we wanted to tokenize a sleeve of our latest venture fund. This was kind of middle of last year, and we did a first principles kind of look at all the places that we could tokenize that venture fund. And so we did a deep dive with the Avalanche team, as well as a lot of the other L2s and L1s that are out there. And we looked at things like, compliance, privacy, interoperability, liquidity of other RWAs on those chains. And, all roads kind of, at least for us, led back to Avalanche. A big part of that actually was our conversations with KKR. So before starting ParaFi, I used to work at KKR, which is one of the largest alternative asset management firms in the world. And KKR is fascinated with tokenization as a way to kind of streamline a lot of the fund administration and kind of capital markets plumbing that ultimately just imposes a cost on anyone engaging in a transaction. And they decided to tokenize a sleeve of one of their private equity funds on Avalanche. And in talking to them and understanding why they chose to tokenize on Avalanche, as well as talking to a lot of the other financial institutions, whether it's a JP Morgan or Citi, also seeing kind of government agencies like the California DMV, all kind of choose Avalanche. It gave me at least like a pretty deep appreciation for just like why, and Haseeb touched on a lot of these reasons, why the customizability of spinning when you spin up an L1 is so critical. And I think with the Avalanche 9000 upgrade, eliminating, I think in the pre-Avalanche 9000, you had to actually validate transactions on the C chain. And you had to stake AVAX. And for a lot of institutions, just as an example, there were compliance reasons why they may not have felt comfortable validating transactions on the C chain, which is a permissionless chain. So I think eliminating that requirement and moving, and really to Haseeb's point, basically lowering the cost of launching an L1 and lowering not only the economic cost, but also the time to launch, is, I think, a bold move, but I think it will pay off long term. So that's been what we've seen in the financial community, and I think it, like, again, is just like a testament to what's to come for Avalanche in the coming years.
Yeah, absolutely. I think one of the things we always talk about internally is the connection between the original vision of how this was going to play out and what we're seeing now in real time for some of those decision makers and what they're looking for. And, like you said, their validator requirements, or what they can hold on their balance sheet, or what they want to use as their gas token. These are all things that pop up. And John, I know you're probably the one that hears it the most around the partners that you talk to, what their specific needs are. So I wanted to just see if there's anything you wanted to add into that kind of realm of discussing with founders and seeing how these options and kind of the limitless opportunities are afforded by Avalanche.
Look, I'll take a second just to say, like, all these things are so amazing, but at the same time, I think it could be a little bit of a curse in the sense of there's an abundance here, right? Like, whenever we talk to somebody and they're like, we want to do this, and someone else wants to do that, and it's all so different, and our response is, yes, we can do it, and then help them do it. It's something that's, I think, a shift in perspective from how this industry has been and how the technology has historically been, right? When you deal with general purpose L1s, you have a solution that you need to contort your business, your problem, your asset, or whatever your use case is to fit that technology. And then we when we talk to them, look, yes, we can do this, or yes, you can do this. You can build it this way, or you can build it that way. So there's kind of a shift in this perspective, right, of how people have traditionally approached this market. Over the course of the last years, I would say probably end of 21, 22, we talked to people who would say, we want to do XYZ and list all these things and then end with, but on chain. And that really wasn't the way to get adoption. Through the last couple of years, we've seen a maturity emerge from institutions, from enterprises, from builders, from developers who come at a problem with a solution that they want to build, but haven't been able to find a home for that solution. And we are not a home for that solution. We are a platform to let them build that home, right? And I think that really has differentiated for us. Of course, with that, it takes a lot more work, right? Like, it's a lot easier to say, here's our solution, figure it out, which a lot of people in this space are currently doing. We go to them and we work with them in a personal manner, right? I think the one of the biggest things that I'm proud of is the true partnerships that we have with the projects that we work with, and the time and effort that we spend with our top partners and with all partners that are interested in building on Avalanche, right? Eh, I always make the case, yeah, we have the best tech, in my opinion. Of course, that's why I'm here. But the best tech hasn't always historically won, right? I can hear Gun jumping through the phone right now and telling me that's not you know, perfect. But the truth is, people want to work with people too. So, in addition to having the fantastic platform that we have, we also take the time to work with people and show them kind of the best ways to do things. And that's really been missing, right, in this space. I think that true partnership, that true ability to see what someone wants to do and help them achieve their dream. That's what Avalanche's real goal is, right? It's not always about Avalanche. It's about the things that Avalanche unlocks, the adoption, the builders, the innovation, whether it be crypto native or incumbent.
Yeah, that's a good perspective. I think sometimes we miss talking about that is the tech does provide the sandbox, but you kind of need the people to work with. You kind of need the vision and the visionaries to show what's possible in the future. And so, one of the things I kind of wanted to switch gears a little bit too is we've been talking about these limitless possibilities, and we've also kind of tied that into potential like areas of restriction that some of these uh, let's just say like web 2 companies or traditional financial companies, some of the restrictions they've had in the past. But now, like especially in the US with the new administration here, there's kind of this idea that the floodgates are open for innovation, for the ability to try things, for the ability to spin up new blockchain integrations. And I think we're just kind of starting to see what that's going to lead to, both the good and the bad, right? And so, would love to kind of just talk about what you all are seeing in terms of the possibilities that are now kind of being opened up, and what you actually kind of see is going to bubble up above the noise, right? Like, what are some areas that you guys are seeing that you see a lot of promise that maybe wasn't possible a year ago, but that might kind of start to show what we've been talking about for years and years and years, the ability for blockchain technology to create efficiencies and create better systems and better infrastructure. That those possibilities are starting to see the light of day, and I'd love to kind of hear what you guys think about what's going to happen kind of in the coming months with some of the opened up regulations and the legislation that we're seeing that's coming down the road. Ben, we'll probably or Steve, if you want to go first, and then we'll go over to Ben too.
No, we'll let Ben start.
Yeah,
Go
yeah.
ahead.
Let's switch it up.
Okay. Yeah. So look, uh, I feel like there's been more positive regulatory developments in the last like 3 weeks than there have been in the 15 years since the Satoshi white paper. It Look, I think that to use like a very cliche kind of venture capital term, the Overton window has shifted where crypto has gone from, I mean, when when Haseeb and I kind of first got into the space, I mean, crypto was very radical, and was, I mean, it was so off the radar of governments, corporations, financial institutions. It just was not acknowledged, and then it's gone from radical to acceptable and popular in a very short time frame. And look, I think it's still early days in the Trump administration, but I would say he seems to be following through on a lot of his campaign promises. A lot of it, the appointments he's made, whether it's Paul Atkins at the SEC or Besant at Treasury, and then Brian Quintenez at the CFTC, which I think was announced yesterday, are basically all very strong advocates of the industry. I should probably mention Hester Pierce as well. And so I'm very optimistic that, regardless of whether we get a strategic Bitcoin reserve this year, that it almost doesn't matter in a way. What really matters is that crypto has been positively credentialized by the US government and has been named as one of two kind of areas of national strategic priority alongside AI, which, by the way, I think the meta previously was crypto equals bad, AI equals good, just to be super reductive. And the fact that crypto is now being paired with AI, I think, is incredibly powerful and exciting. I think that what this does in practice, like regardless of the policies that are put in place, and look, I think we'll get stablecoin legislation. I think we'll get more regulation around how to launch a token in a compliant way. Ultimately, these things are all, I think, very healthy, and we want them as a firm to move our industry forward. And we have kind of specific ideas around what those could look like. But I think on the highest level, regardless of what happens this year from a specific policy standpoint, we've kind of already won in the sense that crypto is now been positively credentialized. And you're starting to see that with fintechs, banks, and allocators. We saw, I think this was yesterday, that the Klarna, the large, massive fintech company, the CEO tweeted that they're going to get into crypto, and that he's the last large fintech company to do so. So almost like kind of capitulation of sorts, right? And I mentioned Robinhood's earnings call yesterday, and you saw Stripe acquire Bridge, a major stablecoin company. So it's almost like we've just seen this gradually and then suddenly shift for banks and fintechs, where they went from kind of ignoring the asset class to now actually realizing they need to be in it, because it's more contrarian now to not be building on crypto rails or not be using stable coins than it is to be using them. And then also, I think this is also trickling through to the allocator community. A lot of the endowments, foundations, pensions, family offices who were maybe on the sidelines because of regulation, because they were like, hey, just the regulatory environment is uncertain. We don't know if that will really hold back adoption of this technology. Well, I think that risk can, I wouldn't say be crossed off the list of risks, because I think there is still a lot that has to get figured out, but I do think it's been significantly mitigated. And so I think the effect of that is is the marginal dollar of fiat is now entering into the space, starting with Bitcoin and some of the other major tokens, but kind of trickling down the risk curve. And so I'm personally incredibly optimistic. I'm pretty sure Haseeb is too, but I don't want to speak for him. And I think, now is really the time as an industry to really kind of continue to build very useful applications, because just because we have regulatory clarity does not mean there's not still a lot of like building to do. And in fact, like it's almost like the building can finally start now. And so, those are my views, and I'll pass it to Hasib.
Yeah, I agree with pretty much everything that Ben just said, and he is correct that I am optimistic. And the Klarna story, I think part of the reason why the Klarna CEO coming out, I think it was yesterday or the day before, and saying, "Hey, I give up. How do I integrate crypto in my business?" The reason why that was so meaningful was that I think just a couple years earlier, he had publicly stated that he thought all of crypto was a gigantic Ponzi scheme. And so you're just seeing this capitulation happening over and over and over again. Is that the people who are most steadfast in saying crypto is bullshit, this whole industry is a scam, there's nothing of value being created here, one by one, they're bending the knee and saying, "Hey, I got it wrong. Okay, it's time for me to learn and kind of figure out what's going on in the space and why crypto matters." One anecdote that I'll share, because I think Ben mostly covered it, but I remember when I first came into crypto, I came out to Silicon Valley. I was in Silicon Valley in 2017, and at that time, so that was the ICO boom, and that was also, I believe, the year that I first heard about Avalanche, and when it was still just a little seedling. So back then, Ethereum was the only game in town. There was very little else that existed in the L1 space, and I remember talking to. You go around to Silicon Valley parties, and everywhere, everybody knew that there was a team at Google that was working on an Ethereum wallet. And everybody knew somebody who was connected to this team. It was within Google Pay. And if you go to a party, sometimes you could meet somebody who's working on that team who could show you just like a little demo. And everybody was like, "Oh my God, this is going to change the world. Crypto is going to be everywhere." Now, you might notice that there is no Google Pay product with an Ethereum wallet. Everything was built, everything worked, but they killed it. They didn't launch it. And it's very obvious now in retrospect that they were right not to launch it, right? You can see, fast forwarding a few years to what happened to the Libra. If you remember, when Facebook decided they were going to launch a cryptocurrency and bundle a wallet into every single Facebook account holder, billions of people around the world, they basically got headshot by the then Democratic government. And of course, recently, David Marcus came out and revealed that basically they were getting a bunch of extra legal pressure from the government to stop doing this and to lean on all of their partners. Because if you recall, they had this coalition or a consortium of other fintech partners that were helping them to put this thing together. And every single one of them were getting letters from senators saying, "Hey, great business you got there. It would be a shame if something happened to it. Pull out of the Libra or we're going to investigate you." So whoever is that VP at Google Pay in 2017 is probably, fist pumping when they saw that of like, "Yes, I made the right call. We were totally correct to kill this thing. We cannot touch crypto." All of that is now over. All of that has decidedly changed. And the calculus is completely different now for every single institution, every single company. I mean, you look at Tether. Tether made, 12 billion, 14 billion last year? That's more than what BlackRock made, right? And you look at BlackRock, of course, the largest financial asset manager in the world. It's incredible that they were able to launch, or not launch, but kick off the Bitcoin and Ether ETFs in 2023, summer of 2023. That was 6 months after FTX collapsed, right? You've seen a relatively small number of institutions, many of them partnered with Avalanche, like Franklin Templeton and all these guys and KKR, that have really been early adopters, right? They've really been willing to bite the bullet and put their own reputations at risk, put themselves at risk in front of their own regulators, in front of their own customers, to do something as risky as to say, "Hey, I believe in crypto. I really think this is going to change the game." That was really fucking hard for them. And I'm glad that for BlackRock it's worked out as well as it has. But the reality now is what we're seeing, to get another venture capital cliche, we're past the phase of early adopters. The early adopters are the ones who did it before right now. They're the ones who had to believe in something, who had to take some kind of a risk to say, "I'm going to figure out how crypto fits into my business and how maybe I can get a piece of this pie that you guys are all building." We are now getting into the late adopters. The late adopters don't have to take risks anymore. The late adopters are doing this stuff because they're afraid of falling behind, not that because they're excited about getting ahead. And so I think that's the really exciting inflection point that we are in front of right now is that all the risks are gone. All of the revenue opportunity is very obviously sitting in front of us. You just saw yesterday Robinhood announced crazy earnings on the fact that they're now making way more money from crypto than they're making through their traditional business. And everybody sees this. Everybody sees what an incredible industry and what incredible business opportunity there is. And where are you going to go? Who are you going to partner with? Who's going to explain all this to you? Who's going to be able to give you the customizability to launch your own chain, have, whether it's KYC, compliance, travel rule, whatever it is that you need to do in order to get your institution or your organization on chain. That's one of the reasons why Avalanche, to me, is so obviously well positioned for where we are in this present moment.
The late adopters, I love it. Go ahead,
I'll
Ben.
jump in and just add some, from kind of what we see, and adding some anecdotal evidence. I was working with the team that helped launch Benji, right, for Franklin Templeton, and that was in 2019. That was at the end of 2019 when Franklin Templeton, under Jenny Johnson's leadership, was like, "We need to get ahead of this. We want to have a seat at the table." But to Hasib's point with the Google Wallet, right? People waited, right? This was ready almost 2 years ago, if not 3 years ago. But it took Franklin 3 years to launch this money market token after they kind of got the wheels going, because everyone was kind of gun shy. Everyone was worried. I talk to John Woo about this all the time. And, I think in the early days, crypto said, you know, we don't want regulation, right? It was a little bit crazy, right? Now, then we kind of got to this window, I think, for the last 4 years or under the last administration, where it was, we don't want bad regulation. We don't want regulation, but at this point, we're willing to take, at least from the institutions and the enterprises, we're willing to have bad regulation than no regulation. So at least we know where we stand, right? Nobody was ever willing to take a chance and launch something or do something and then wake up one day and realize that they're on the wrong side of regulation, if and when it had ever come, right? So just that hesitancy to do anything because you don't know kind of where you sit, if you don't know where you stand with where things are going to unfold. I don't think we have clarity yet, but to Ben's point too, there is that optimism that clarity is coming. And America, for the most part, is leading in terms of saying, look, we're open for business here, guys, right? People now feel that they can at least take the chances. They can innovate. They can try to do things, and they can do these projects that they've been wanting to do or launch these use cases without being on the wrong side of an imaginary line that is arbitrarily drawn, right? So if you do make a mistake, if it's not within the lines that are going to be drawn, okay, then you can adopt and adjust and not be, to quote Steve, and not get a headshot like the guys at Libra did, right? Like you're not going to get smacked down for innovating and for trying to do new cool things. So, I mean, over the course of the past couple of weeks and past couple of months, the influx that we have seen from people who have always been like, we really want to, but we're not ready. We really want to, but the board is worried. We really want to, but we can't figure it out without taking too big of a risk, right? Nobody's willing to take a little bit of a lot of risk for something that's a little bit of innovation, right? It's going to take that kind of collective comfort to move forward. And I think to Steve's point, right, the early adopters, and I think this, we've seen technological advancements in the blockchain space pretty significant, right? First, second, third generation blockchain technology, whatever you want to say. But I think that we are now entering the second generation of blockchain businesses, right? I think that early adopter uh, point that Hasib was talking about, that's your general purpose layer ones, right? That was people tinkering along the edges, making things faster, making them cheaper, making them more performant. We've had great new virtual machines arise with Solana and Move and many others. But you're now seeing that late adopter phase, which is kind of the second generation of crypto native or blockchain businesses, which is the adoption phase, right? The ability to say, okay, my business needs its own layer one, my asset needs its own layer one, maybe my jurisdiction needs its own layer one. And if it doesn't, it could start on a general purpose chain and then graduate to one. The ability I think that we have that's different than anybody else is you don't have to start with your layer one either. You can start on the Avalanche C chain as a performant EVM and then graduate to your own chain. In the same way, you could start private permissioned if you're an institution. And then when clarity comes, you can maybe be permission public. And then maybe one day be public permissionless. There's not this kind of one size fits all solution, but also you're not bound by that solution at inception. You don't have to make a decision that could impact you forever and then not be able to change. You could move on. And I think, you know, we've seen Ethereum try to scale with L2s and L3s, and I've even heard about L4s, kind of like an inverted pyramid. Ethereum wasn't built to scale to where it is, where it needs to be today, God knows how many years ago, but it's set the standard, right? And I think you've seen with Solana and the Move chains, like this infinite pipe that just gets larger and you shove everything through it. We look at things just simply different. We look at the Avalanche C chain as a major highway that anybody can transact on, and it's going to get better and it's going to get more performant. But you can continuously add more lanes across. They could be private, they could be permission, they could be EVM, they could be Solana VM, they could be Move VM, they could be a virtual machine of the future and have that interoperability. I think that's a huge unlock that just like people haven't been able to wrap their heads around it because it hasn't been a solution that's been available until now. And I think we're really ready to take that shift, yeah, that Overton window to quote Ben, into the real adoption phase where crypto influences incumbents and enterprises as it has been for so many years to do things on chain. And then they take inspiration and they build upon each other. And when you connect these things together, it creates a virtuous cycle, right? I think we've seen this over the years with enterprise chains. They just were in a silo, so it really didn't make sense. But when you can connect multiple private permission chains together, well, you can recreate a payments network, right? If you connect the private chain or a permission chain to a public chain or pull USDC from the C chain, well, now you can bring an asset from the C chain to fuel your L1 or to fund payments or do whatever it is that you want to do. What's possible is possible now, and at least at the technology level. But more importantly, people are not worried, right? People see that that innovation will be rewarded, and that people can try and fail, and if they make a mistake or tumble along the way, they can adopt and change. It's just a huge unlock across so much. So we've been seeing stuff come across that from people that yesterday I hadn't talked to in like 2.5 years, who was really bullish and then just got shut down, reach back out and say, hey, we're ready to go. So it's a little bit of a lot, but we're excited.
It's a lot. But yeah, there's a lot to be excited about. I mean, what's interesting, and we'll kind of close out on this one last question slash topic, is what a lot of us see as the narrative of the day. And you go on Twitter or any other channel at any given moment, and you're seeing AI agents, meme coins. You're talking about what kind of blockchain integration Doge is going to adopt for government efficiencies. There's a lot going on, and you could kind of pick and pull all these things and say, here's why this makes sense on Avalanche. But we're looking ahead. We're looking ahead at what the year is kind of painting for us. And so I think the last thing I wanted to ask both Ben and Haseeb is, based on the current narratives and what you're looking at in the future, like, where do you see the industry kind of heading? What are you excited about? Maybe it's a new use case that we haven't thought of yet. Maybe it's a certain type of industry coming on chain. Would love to, hear your final outlook on this year and what you're kind of getting really excited about.
Candidly, I don't think I ever have good answers to these kinds of questions. So when you talk about narratives, you're right. There's a lot of narratives out there. So there's the AI agent narrative, there's RWA narrative, there's stable coins, there's meme coins, there's all this stuff, and Avalanche has a piece of all these narratives. But I'm a venture capitalist. I'm a terrible trader. Ben probably is better on that side than I am. And so I really invest on multi-year time horizons, right? Like when I first invested in Avalanche, we had no fucking idea how the space was going to play out and how this industry was going to evolve. And if you zoom out far enough and you want to see what is the meta narrative, what is the big grand narrative that's driving all of these little sub narratives that pepper the experience of being in crypto along the way, to me, the really obvious meta narrative is that more and more things are going to come on chain. The stigma of blockchains is rapidly disappearing. And that just means that all the stuff we've been talking about for so many years now, about asset tokenization, currency tokenization, about more and more people bringing their financial lives on chain because it's just better, it's just more efficient, it's just cheaper. Like that will just happen. And it will happen with relatively little fanfare, relatively little craziness compared to what, when you normally think of narratives, you think of things like, meme coins or AI agents that are just these kind of crazy boom bust things. But yeah, over the long arc of history, that will be the thing that when we look back in 5 years and we say, what really happened? What really changed in 2025? Uh, I think that will be the answer, is that more and more institutions come on chain and being on chain stops being weird. To me, that's the biggest narrative that I'm most excited about. But it's not as sexy as talking about meme coins.
Still makes sense though. I think, yeah, the long term vision plays a lot into what we've been talking about, which is designing a system and designing a network that can say yes to any possibility and not necessarily
Exactly.
have to adjust the tech just to fit today's narrative. We're not doing optimization specifically so that agents can operate better on one chain. It's building a system out where something like Kite AI can build their own L1 to help facilitate all the incentive structure for data for AI. And so that's the vision. And I think you spoke to it really well. So Ben, we'd love to hear from you as well.
Yeah. So yeah, John and Hasib were very eloquent, and it gave me goosebumps. I'm very excited about the future. I will say, I think the North Star has to be, how do we bring real GDP onto blockchains? I think the motto of Stripe when it was just getting started was, how do we increase the GDP of the internet? And so I think the question for us as an industry is, how do we increase the GDP of blockchains? And when I think about real GDP, it's how do we bring businesses, how do we bring things like payments, how do we bring financial services in the form of DeFi, how do we bring DePIN networks, how do we solve real problems by using blockchains? And I think that has to be the North Star. And look, there's a lot of nonsense in crypto. There's a lot of short-term stuff that goes on. There's high FDV, low float coins. There's meme coins. There's a bunch of noise. I mean, and candidly, there's a bunch of noise within very real, exciting themes. Like, for example, within DeFi, there's a bunch of noise, but there's still a lot of nuggets of like extremely interesting technology that's going to change the world. So I think as a crypto investor, I think our job is to kind of sort the wheat from the chaff and figure out what is real, and kind of get out of like I think like the crypto Twitter kind of echo chamber can be very short-term oriented. But when I think about like the long-term themes in crypto, I'll kind of echo what Hasib said. Like, if you would have asked me like what I was excited about in crypto in 2020 or 2021, I'd probably say the same things that I'm going to answer right now, which is I'm excited about stablecoins, I'm excited about DeFi, I'm excited about RWAs. Maybe a new thing is I'm excited about AI agents, like the financialization of AI agents on chain. I'm excited about prediction markets. I think all these things just take time to build, right? It's not, stablecoins have grown quickly, but there's still a lot more building to do. So, yeah, I think it's all the same areas that we're seeing growth in. It just takes time. And I think the defining theme that I said at the beginning of this spaces was that I think that the defining theme of the rest of this decade will be the corporations and institutions that begin to move their operations and assets onto blockchains, whether it's Robinhood or Klarna or JP Morgan or Sony or whoever else, right? I think we're going to start to see real businesses kind of move on chain. And that is the big next unlock in my mind.
Yeah,
I'll just jump in and throw. I'll just jump in and throw 2 cents. And to Ben's point, right? These guys are going to be moving on chain, and I think the difference with us is that they're going to be bringing it on their chain, right? That's what they've always needed. That's what they've always wanted. When we talk about payments, Or even when we talk about tokenization, like there's always this kind of everyone's talking over each other's heads, right? Like the crypto people think if you just tokenize something or if you just put it on chain, all these great unlocks happen and everything's perfect. And then the traditional players are like, but you don't understand how our business works, right? Like so both sides are talking over each other, and I think that's because they haven't had a solution that can really bridge that gap, right? Payments networks don't exist on a single rail, right? You have ACH and Fedwire and SEPA and Swift, but you can start to recreate in a better that talk to each other, right? You can start to see this with government at the permission level, where opportunities exist now and are endless. And adding to that, the thing that we often need, and when I'm asked, like, what's the one thing that you think you need the most of? And I say time, right? Like that's not always the sexiest answer, the coolest answer, but real things take time. And crypto Twitter has a 3 month, max 5, 6 month attention span oftentimes. And we really push to own the medium to long term. And in that short term, things come and go and change. But you see things happen in that time that help you shift and change and adapt. You guys mentioned Kite AI. They launched their testnet the other day. They have over 500,000 wallets. Like there is a demand for real use cases. There is a demand for real businesses to be on chain. There is a demand for crypto native people to be doing things aside from the typical speculation and short term kind of metas that come and go. So we're seeing that. I have yet to find a way to kind of to fill that short term gap or to bridge that gap. That's something we will always endeavor to do better at. But ultimately, those medium to long term plans that have started last year are going to start to come to fruition now. The things that we were working on 6 months ago will be coming in the next 6 months. The things that we're working on now will be coming on the heels of that. And I think what we've been seeing with on the tech side, on the ability for people to actually take chances now and innovate, that's unlocking things at a faster pace. So we're seeing all these things kind of catch up together and build upon each other, whether it's the right time, the right tech, the appetite. It's the graduation is coming, and with the support of guys like Ben and Hasib, it's fantastic to see, and we look forward to their support and all the builders that are building on Avalanche and all the partners that are looking to build on us for their support and for their guidance. So it's an exciting time.
It's definitely an exciting time. I didn't realize that after this spaces, I was just going to be so ready to run through a wall. But this is really inspiring to hear all these perspectives, to hear about what's coming, but also what everybody's seeing today. And of course, I mean, it's great to have these two partners on board and to continue to show their support for Avalanche. But it's also a testament to all the people that are in the room here, all the builders and the community members that show up day to day to support what Avalanche is building, to bring more people into the community, to bring more people on chain. So it's a collection of both, the investors and the VCs and all the supporters, but also the community members and all of you. So I'm glad we all get to be together in the same space like this and talk about the future. So yeah, we're going to wrap things up here. I know we kind of are hitting up against the hour, but I wanted to definitely give a special thanks to Hasib and Ben for joining us, for taking their time out of their busy schedules and coming on here to just catch up. And we haven't talked to you guys in a while, and we're excited to continue to work together and have this conversation again in a couple months down the road and look back at what we were talking about and seeing it all kind of start to play out and come to fruition. So thank you guys for joining us, and John for joining us as well.
It's my pleasure. Thanks for having me.
Pleasure, guys. Thank you. Thanks, Ben. Thanks, Steve.
Yeah, appreciate you guys.
Take care, everybody.
Have a great rest of your day and a weekend, and yeah, we'll see you soon. Thanks.